We're in the cycle now. The next leg up on gold and silver is when these guys finally wake up. Hi, this is Mike Maloney, and I've got Jeff Clark on the line with me because I wanted to talk with him about his article, The Big Silver Shock, Institutions Decide to Invest. Jeff, how are you doing?
I'm doing great, Mike. I'm glad to be back with you again.
So I was reading this article, and it's got some amazing numbers in it. People just don't realize how small the silver market is and how much currency is going to try to land on gold and silver one day. Your numbers here stress some of that. So tell us a little bit about it.
So I decided as a thought experiment, just like we did with the gold article on if institutions decide to really sink their teeth into gold, that I would do the same thing for silver. So what I did was I first started with the total amount of above ground silver that's in investable form, coins and bars. So we excluded all the silver that's been used in industry, jewelry, silverware, electronics, all that, and all the known silver that we believe exists in some type of investment form. And I basically plugged that figure into the same kind of tables we did for gold and just listed the percentages and the amounts if institutional investors wanted to invest just 2% of their assets into the silver market and buy physical silver. 2% seems to be the figure that a lot of these institutions would devote to any particular asset. And I took some at 5% as well, because some may want more. There may be a dedicated precious metals fund, for example, that would want more than 2% exposure to silver. So I put even 5% in there. And then with this chart, what I really felt I had to do was highlight in red the percentages that were above 100% of all the known above ground investment silver that exists, which according to the CPM Group is about 62.5 billion ounces. So it sounds like a lot of silver, but when you look at the table, it's just completely and easily overwhelmed by the amount of cash these institutional investors have. And if they show any interest whatsoever, it could just completely overwhelm the silver market.
Yeah, when I look at some of these figures, it just reinforces everything. For years, I've always thought that we're going to see triple digit silver. $150 silver really isn't that much of a stretch, considering it was $50 in 1980 and it's still below its 1980 high. To me, that's just like a no-brainer. What hasn't happened yet is we haven't seen an event when it comes to currencies and the banking system and the markets. We had a scare back in 2008 when it came to the system. What we haven't seen is any panic yet. And once people start rushing over toward gold and silver, the amount of funds that can flow into it is just astronomical. And, 3 times the 1980 high sounds absurdly low to me. I really think we're going to see something much higher than that. But I think $150 silver is actually a no-brainer. One of the things that I don't think you did in here was try and calculate any price projections. But what you do show is that there's basically, just mutual funds have enough if they were just going to put 2% of their assets into silver, it would be more than 16 times the amount that all of the above ground investable silver is currently valued at.
That's correct. And the point isn't that all mutual funds would do that, but if just a few did that, it would just completely overwhelm the silver market. And by the way, the mutual funds, that's not global mutual funds. That's not every single mutual fund in the world. That data is hard to track down. So there's actually more cash in each of those categories than I list there. That's just the publicly available data. So it's actually worse than what is portrayed in that table. So it's quite amazing. And that chart there, I tried to elongate it. The one titled Silver Market is tiny compared to global assets. And you'll see that you can barely see the bar for the total amount of above ground investment silver. It's very, very tiny.
Yeah.
And again, it's not those bars for the other institutional investors is not exhaustive. There's actually more cash than what is represented there.
So there's the total above ground silver is worth about 62 billion, I guess.
Yes.
Yeah. 0.062 trillion compared to just the 30 largest mutual funds in the United States have 50 trillion.
Right.
And global pension funds, but as you said, some of them you can't get the data on. That's 44 trillion. You start adding all of this up and it's huge. In the graph above that, you show that, if just 2% of mutual funds, pension funds, investment banks, life insurance, sovereign wealth funds, hedge funds, and private equity funds, if they tried to take 2% of their assets only, put it into silver, that would be 42.5 times more than the value of all of the above ground silver that there is. That requires your silver would have to be over $1,000 an ounce for that to happen. They can't buy, they're trying to buy at this price, they're trying to buy 42 and a half times the amount of silver that exists.
Right.
No, I don't want to buy all the silver. I want to buy 42 and a half times all of the silver that exists.
Oh, and the other problem is that metal isn't all for sale. That
Right.
figure that I quoted there.
Right, at least not at these prices.
Right. A lot of people won't be selling; they'll be buying. That's the issue. In a bull market,
Right.
people are buying, not selling, and so everybody has their price at which they'll sell something. But in a bull market, there's going to be a lot more buying than there's going to be selling, and so the problem is actually even worse than the tables outlined. So. And some of the objections we got to the article, by the way, some of the people in the comments were saying, well, this would never happen. And, pension funds, for example, aren't going to buy silver. Well, I disagree with that because we know some pension funds already are buying gold. They're already buying gold. That's a non-interest bearing asset. They're still buying it. So it's not a big step for some of these pension funds to want to be in silver. And you have to keep in mind also, Mike, that if the stock market is falling and they're losing on that and gold and silver are rising, they're going to have a double incentive to move at least some of their assets over into gold and silver.
Right. And, all of these institutional investors, they're always late on the trends. Gold and silver have been the best performing traditional assets of this century. A lot of cryptos have way, way, way outperformed gold and silver. But as far as traditional assets goes, stocks, bonds, commodities, number one this century has been gold and silver. They've returned much higher performance than anything else. With a track record like that now, going back, we're getting close to 2 decades. They're starting to go into gold. They're going to be going into gold and silver in a big way sometime soon. Back in the 70s, nobody was recommending to put gold in your portfolio. That really didn't happen until the gold bull market was over with. That happened in the 80s, and they used to say put 20% or 25% into gold. Then it became 10% by the 90s. By the 2000s, nobody was recommending you don't put gold in your portfolio. So by the time it started rising again and went from 250 all the way up to 1900, the professionals were not recommending gold during that period of time where it had such spectacular performance. And the bull market is basically back on again. It's rising. This time, there's enough history behind it to where all of these big funds are going to wake up. And I do believe that a tremendous amount of the value they currently contain, these trillions upon trillions of dollars worth of value, is going to come chasing these tiny piles of metal.
They have very little exposure as a group, institutional investors, to gold and silver now. So the point is, it's not going to take very much at all compared to the amount of cash they have to come into this market and absolutely affect both supply and the price. And as you're pointing out, the price is absolutely going to be impacted if any of these groups get interested at any significant level at all.
Right. That's the reason I say $150 silver is a no-brainer. If there's 4,250.6% more currency available to chase it, if that's just 2% of all of those institutional funds, if only 2% comes to chase it, it's 4,250% more currency than the value of all the above ground investable silver that there is. And that would require prices more like $1,500 an ounce, not 150. And here we are down at 18. I mean, this is, when you think about it, it's just sounds crazy. But, you know, the opportunities here are bigger than just about anything. And the nice thing is, down here at the prices that we're at, there's a floor under both gold and silver. A whole lot of miners are not profitable at these prices. There's limited downside risk, and the upside potential is absolutely enormous.
This is a trend, Mike, that I definitely want to be in front of. I want to be there before they are, because I do believe that at least some of these institutions are going to want to own gold and silver. And I want to be in that path. And so that's another reason to own gold and silver today, in my opinion.
You're going to be speaking at the Cambridge House Gold and Silver Summit in San Francisco, right?
That's right. Yeah, the Silver Summit in San Francisco there at the end of October. So if we have any listeners that happen to be in the area or attending that, please introduce yourself.
Yeah. Okay. So I think we should wrap it up, but just, I mean, the amazing amount of currency out there. There is a blizzard of currency on this planet right now. A lot of that value is stored in these mutual funds, pension funds, investment banks, and so on. And they have not even, I mean, they are still asleep when it comes to gold and silver. They don't even know about it yet. And it's been the best performing traditional asset of this century. We're in the cycle now. The next leg up on gold and silver is when these guys finally wake up.
I was just going to say, I think some of these institutions may even create new funds. Like an institution may have a bond fund, for example, and that's not going to buy silver, but they may create a new fund so that they can buy silver. If they want it, they're going to get their hands on it, and they could actually kickstart some sort of bidding war, because they'll be willing to pay anything to get exposure to it. And I think that's coming once this gold and silver rush really gets started.
Right. Their job is to produce returns for their customers. If the stock market starts to go down and precious metals are going up, they're going to be these mutual funds and pension funds and investment banks and everything. They're going to be liquidating other assets, and they're going to be purchasing precious metals. So anyway, thanks for your time, Jeff. It was great talking with you again. Please like it, share it with all of your friends. Subscribe to our channel, click that little notification bell, and we'll see you next time.